This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We're now in the final 2 weeks of the northern holiday season, and that is anchored by the central bank shindig at Jackson Hole, Wyoming, starting at the end of the week. This week, China will review its loan prime rates later tomorrow, no changes expected, and Canada will report July CPI inflation. And there is a dairy auction on Wednesday, so it'll be a light data calendar. But first up today, more evidence that foreign direct investment has stalled into China. We marvelled at the stall in both May and June, and it has extended into July, although there is now a positive 40 billion yuan in the month. The net inflows are still very small for a country the size of China. In July 2023, the net inflow was 140 billion yuan, so in July 2024 it is down 70% from then. China has been masking the stall by only referring to the year-to-date results rather than the monthly outcome. But even that approach will catch up with them soon. Now year-to-date 2024 is down 50% on year-to-date 2023. That is massive. And it is not just foreign direct investment. Beijing stops reporting equity flows starting today, a key sentiment indicator to track their 14 trillion equity market. The data to Friday showed the year-to-date flows turning negative, so the rush seems to be on to get out. From here on, we just don't know how fast it develops. Concerned about the negativity, China told fund houses to stop displaying real-time mutual fund products' net value. The last time it was available, it wasn't good. But if it does turn positive, Beijing will be the first to tell us. And the Middle Kingdom has had its weather and climate challenges this year too, more so than other large countries. The impact of floods, while common in China in summer, has grown more pronounced this year, affecting over 7 million people nationwide in July, when Beijing was also struck with the worst rains in 140 years after the capital's hottest June on record. The dramatic swings between extreme heat and intense rainfall have stressed China's power grids and shut factories, while risking the country's water security and causing widespread crop damage. Nationally, direct economic losses from natural disasters surged in July to almost $10 billion in that 1 month, more than in January to June combined. There will be food security consequences. Meanwhile, Taiwan reported its second quarter 2024 GDP expansion at 5.1%. But that was down from 6.6% in the first quarter, even if that was up from 1.4% in the same quarter a year ago. Beijing is probably looking on in jealousy. In Japan, profits topped analyst estimates for 70% of surveyed Japanese companies in the April to June quarter, led by the vehicle and artificial intelligence fields. Many are benefiting from the tailwind of the weak yen. In India, 19 of their 38 states are running 3% to GDP deficits or more in their bids to shine economically. And that is raising the national public debt sharply. Delhi is concerned and tightening up what is permissible. And the central government is having to restrain itself to cover aggressive state deficit spending. The catch-up of their infrastructure deficit is essentially driving the pressure. In the US, the University of Michigan Consumer Sentiment Survey rose more than expected with its first increase in 5 months. The Expectations Index improved, the highest in 4 months, while the year-ahead and 5-year-ahead inflation expectations were unchanged at 2.9% and 3% respectively. And that rising sentiment doesn't include their housing market. Housing starts fell sharply in July to their lowest level since July 2019, pandemic accepted. Residential building consents also fell back to 2022 levels. The US economy is expanding at pace, but without the support of their housing markets. But it's very much better north of the border, where Canada reported a surge in housing starts, up 10% in July from the same month a year ago. And tensions are rising in Canada over the railway union bargaining that is going down to the wire. If there aren't strikes, there will be lockouts. The EU said its trade surplus is rising, but that is because imports are falling faster, down 8.6%, than their exports, down 6.3%. The US Treasury 10-year yield is now just on 3.88% and down 1 basis point from Saturday and down 5 basis points from a week ago. And the price of gold will start today up $1 at $2,508 an ounce at a new all-time record high. A week ago, this price was $2,427, so a 3.3% rise since then. And oil prices are unchanged at just on $75.50 a barrel in the US, while the international Brent price is still just on $79 a barrel. And the Kiwi dollar starts today unchanged from Saturday at 60.5 US cents. A week ago, and that's pre the OCR cut, it was at 60 US cents, so a half a cent gain from then. Against the Aussie, we're still at 90.8 Australian cents. Against the euro, we're still at 54.9 euro cents. That all means our trade-weighted index starts at 68.8 and unchanged from Saturday. And the Bitcoin price starts today at $59,568, and up a mere 0.2% from Saturday. However, it is down 1.2% from this time last week. Volatility over the past 24 hours has been low, at just on plus or minus 0.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.